Hello, this is Jim Pellegrino, your host for The Hour. Our July show's guests make up a business and economics panel. Mark Namath, President, Jonell Laboratories, nationally recognized and awarded small business. Peter Gioia, Vice President and Chief Economist, Connecticut Business Industry Association. Chris Calandra, Certified Financial Planner, Elliott Wealth Management Services. Joe Markley, Connecticut State Senator from the 16th District and Republican candidate for Lieutenant Governor. The panel discusses the state, national, and international financial and economic implications on business and people of trade and tariffs, escalating conflicts in the Middle East and North Korea, consequences of midterm elections, economic nationalism, and how President Trump is doing. So sit back, relax, don't move, and enjoy the hour. Hello, this is Jim Pellegrino, your host for The Hour, and we have a special four-person panel with us for this whole show tonight. So I will introduce them from my right to the camera's left. And the first person is Joe Markley, who is a Connecticut State Senator from the 16th District, which is Southington, which is Cheshire, which is Waterbury, which is
Wolcott and Prospect.
Wolcott and Prospect. So welcome to the show.
Pleasure.
And for the audience's information, not only is Joe a current sitting senator from the 16th District, but is the Republican nominee or endorsed candidate for Lieutenant Governor.
Correct.
Right?
Absolutely.
So if things go well for you, Joe, 1 year from now, you should be back on the show. Is that right?
I hope I can come back either way.
Either way, it's true. So welcome to the show.
Thank you.
Our next person is Chris Calandra. Chris is a certified financial planner. And you can correct me when I'm wrong during the show, Chris, but he's the kind of a person that people like are at this table go to for everything from financial advice to retirement planning and everything in between.
That's right.
So your role tonight, Chris, is to make sure that when you hear comments from the other three guys, you play that into what you be telling your clients. Chris has offices in Connecticut. There's two in Connecticut.
Two in Connecticut.
Southington and Madison.
Madison.
In Madison. And also, he's got a place down in Florida.
Yeah, we have an office in Florida, Jim, in the Villages, which is one of the preeminent retirement communities in the entire country. It's an hour north of Orlando.
About 120,000 captured audience you have down there, Chris.
Captured audience.
So you should be doing very well down there.
Absolutely.
And to my left, and the camera's right, is my good friend Mark Namath. Mark is the president of Jonell Laboratories in Meriden, Connecticut, and I'm pleased to report they celebrated their 50th anniversary of this family-owned business. And not only that, Mark and I have been good friends for a long time, and I'm here to tell the audience that they have been recognized and awarded a national level recognition from federal government, I know you've been state awards. He's a small business, but has done very, very well under Mark's leadership. So welcome to the program again.
Thanks for having me here,
Mark,
Jim.
this is your third or fourth visit at least.
Yes.
This is Joe's first visit. It's Chris's second or third. I think it's Peter's second.
Second.
Yeah, so you're almost in the emeritus category here, Mark. Okay, so our next guest is Peter Gioia, who is the Vice President and Chief Economist at CBIA, Connecticut Business and Industry Association, which has got a 10,000 member business association, which is the largest state association of its kind in the country, right? Mm-hmm. So when you walk into the governor's office, you have a lot of leverage. Pete, is that it?
Well, we wish we did.
I could never imagine the scene sometimes reading articles in the paper when CBIA comes out disappointed, and if I were the governor, have you sitting there and thinking to myself, I'm looking at somebody who represents 10,000 businesses, and how I could not agree with you, Pete. But it happens, right?
It happens.
Okay. So listen, what we want to do is we're going to have a strictly 1 hour panel on finance and the economy. And what we're going to try to do is we're going to try to focus the feedback that I get from the four guests on what it is that's happening in the business community and to some extent the personal aspect of the business community as a result of some of the topics that I'm going to bring up. And the first topic I'm going to bring up, and any one of you can comment on it to begin with, I turned on my good friends on CNBC this morning, and they were all peed in a state of euphoria because the jobs look pretty good, the employment level looked pretty good, the participation level looked pretty good, and I saw the opening bell on the stock market, and they were in a state of euphoria there this morning. So from a national economy point of view, things look pretty good. Agree, disagree? Let me start with you, Pete.
Absolutely. I mean, 2018 and 2019 are likely to be two of the best years for the U.S. economy in the past 50 years.
Wow. 50 years, you said.
Yeah. I mean, if you take a look, even the more conservative forecasters are saying we're going to have 2.9 GDP. I think it's likely to be higher, probably 3.3, 3.4. There is likely to be 200,000 jobs added per month. We just had a report today, 3.8% unemployment, which is spectacular.
Spectacular, it is.
Lowest African American unemployment rate in history. So there's a lot of good things that are going on in the economy. Mm-hmm. And I think that we're only in the early stages of it because I don't think the full effects of the tax changes that went into effect are really hitting the economy yet. Mm-hmm. And when they do, it's going to be even better.
Mm-hmm. Mark, how are you feeling about it?
Overall, rather confident. We feel that we have at least a national administration that has our back as business owners. And people invest when they feel good. It hasn't been that often where we as business owners felt good that there wasn't going to be something coming down, annoyance or nuisance, but removing some regulations, having the tax.
Why did I know you were going to bring that up? Go ahead.
It's important.
Yeah.
It's as I said, you emotionally feel good and you're ready to invest because you feel that you're going to be supported.
Mm-hmm. Joe, how are you feeling about it?
Well, my feeling, I don't have the expertise that these gentlemen have, but the numbers don't lie. Things have moved in the right direction, and the tax cuts, it seems, have succeeded. And I think Connecticut ought to be taking a lesson from that, that we can see what works nationally. Yeah. We ought to be doing it here at home. I will feel good about it when that prosperity comes to Connecticut. We seem to be lagging behind the rest of the country, and we need to get on board with the program that brings us forward.
Mm-hmm. Well, before the tax cut, it's important to note that the stock market was skyrocketing. Yeah. And why was it skyrocketing? Because they said no new federal regulations on business unless you take away other regulations.
Mm-hmm. Right.
And so basically they gave everybody predictability, and that's what's very important.
Business loves that.
And if you think Connecticut could learn from the tax thing, they can also learn from the regulatory aspect of it. That would be, if the legislature would promise for the next 10 years there won't be any new regulations on business, you'd see significant additional investment.
And that would be the easy promise to make, because the pressure is on you to balance a budget. It's tough sometimes.
It doesn't cost a dime.
It doesn't cost a dime. It's political pressure that forces the regulatory changes, and that's what we have to change.
Mm-hmm. So that means, Chris, that people who are coming to you today for financial and retirement planning advice, when you sit down with them, what are they saying to you? Are they seeing what Joe and Mark and Pete are seeing right now?
They are. There's a disconnect, though, because I agree with my other hosts, is that the economic numbers are very strong, and they see that. But the reality is there's a disconnect when you turn on the news tonight, and you mentioned what you saw on MSNBC this morning. There is a disconnect. CNBC.
Right.
There's a disconnect in terms of what you see in the media. So most people feel more confident, like Mark had said, because they see their own economic fortunes seem to be improving with the job market being much stronger. We've created jobs for like 93, 94 months in a row. And so they feel that in their lives, and they're increasingly optimistic. Another stat that I'll add on to what the others have said is that consumer confidence is way higher than it's been. You have to go all the way back to when Bill Clinton was president to get to the level where we have consumers being confident. The disconnect, and I get this from my clients, is why does the news seem so negative, yet in my life, anecdotally, things seem to be getting better and there's more optimism. And it's a struggle between those two that we're often talking to clients about.
You know, it's interesting listening to him talk. Perception is reality. And I would imagine that there's some latent holdback on the part of people who might normally come to see you. If they're watching or listening to the wrong news, they would have an inclination that things aren't all that good, so maybe I shouldn't be going to see.
It's a little bit of that, and also, like Peter had said, is, you know, they feel, hey, the stock market's doing good. I feel good about it. You know, my company is doing well, whether they work for corporate America or they're a small business owner. But then it'll follow up, you know, is something bad going to happen? And I think it plays into what is going on in the public domain that doesn't square. It's, again, this disconnect between the good things that each of the panel members mentioned. But if you watch the mainstream media, there's kind of a different viewpoint that permeates. And investors that we work with, small business owners, retirees, and everything in between, struggle with that, and it makes them a little nervous about whether what they think is happening that's causing them to be optimistic, is it real or is something bad about to happen?
I want to go back to something that was brought up, because this was made a big deal of by President Trump when he came in, and to the point that Peter quoted it, which was, I think he came in and said something along the lines of, we're going to be cutting back on regulations because they're affecting business, especially small business, and for every one that we pass, we're going to cut out, I pick a number, I forgot what it was, 5 or 10 or 15. I think it's actually worked out to 19. I don't know whether they're exaggerating or not, but even if it was half of that, right? But I mean, Peter made a point. I know from talking to a lot of small business people, Mark, if there's one thing that they would say, leave me alone, it would be in the number of regulations that govern the small business, right? Tell the audience how, you don't have to get too specific, but tell the audience what regulatory overstatement does to you.
I'll give you a specific example. During the previous administration, there were some regulations about posters. Unemployment posters or federal required posters. They had to be a certain size, and they had to be specified where they're going to put on the wall, what could it be around it, what was the size, and when they have those regulations, you're worried that someone's going to come in, specifically look that not only do you have the poster, but it's the right size, the right font, and that's completely no value added.
No value added.
And you're saying, okay, if they're going to focus on that, what other things are they going to do? Are they going to send OSHA in looking for problems? Are they going to do a look at your financial reports with a fine-tooth comb, instead of saying, let's focus on, you know, we're all in this together. How can we make the economy grow? One of the reasons we're successful is we avoid distractions. That thing, the size of the poster, where it's placed, is a distraction. And you don't have confidence, you hold back. When you know you're not going to be nickel and dime to death, you can invest.
So, you know, Joe, listening to what Peter was saying to you about would that it could be that state government would take this lesson from the national economy. Remember when the president came in and he said this, there was what Chris was saying, the reaction to it on the part of the media was, this is ridiculous, you know, it's not going to do any good. Or the overreaction on the other side, it's going to bring the whole economy down, et cetera, that kind of stuff. So I have an idea, Joe. Here's my idea. That knowing that, I mean, the last time I interviewed a politician one time that told me that the folks in the General Assembly of the state of Connecticut actually manage every year to pass 2,000 to 3,000 new laws. Is that about right, or?
I think that's a little high, but it feels
well, let's
like
cut it in half
Yeah.
and say 1,500,
Yeah.
right? Why? I mean, why don't we hold a vote of the panel right now, Joe?
Yeah.
Right? And Peter and Mark and me and Chris, and we'll ask the question: would we like to see the state legislature just declare a moratorium for 1 year and just optimize what we have?
I would love to take the rest of our time to talk about this topic, which fascinates me. I think one of the problems is when you have the title of a lawmaker, you think that what you ought to be doing is making laws. If you're a baker, you bake bread, right? And the problem is, and people are very attached to the idea of getting a bill through that is their bill. And the other thing that's a danger with regulations and with mandates on towns are something we hear about all the time. And legislators, you meet with your town government and everyone says, I'm not going to vote for any mandates. But then they put a bill in front of you and it says, oh, we need protections for students getting concussions in athletic events. Or if it's a business thing, it's something like raising the minimum wage or paid sick leave or things like that. And people say, gee, that would be a nice thing. And you fall prey to the idea of doing nice things and somehow assuming that only the legislators in Hartford have the sense to do nice things. I say to them all the time about something, but you talk about something like student concussions. School boards on the local level love their children too. They want to do the right thing for them. The state ought to trust the municipalities to make decisions for the city, and they ought to trust businesses to conduct themselves in a reasonable way. A business that doesn't want to do anything that's going to hurt its employees, I mean, partly because you don't want to do it anyways, and partly because you don't want to be liable to do it.
Peter, I saw them pass, I don't know whether it passed or not. I actually read something in the paper the other day that either the governor or sponsored or it was emanated from the legislature itself, that they are now banning me or Mark or Chris from asking an employee, a prospective employee, what they currently made. I can't ask them what they made in their last job. I mean, do they have any business sense whatsoever?
There's just a lot of micromanagement, and that actually was one of the least onerous.
One of the least onerous.
That they tried to get
Give
through.
us some more onerous. Yeah.
Well, you know, nobody wants sexual harassment. They want to prevent it. Many companies, first, for managers of companies of 50 or more, they're required to take training. Many companies give their training to everybody. Many companies below 50 employees provide training to people voluntarily. But the state wanted to mandate down to, what was it, 3 employees?
3 employees, correct.
3 employees, and not just the managers, all the employees. Well, first you've got supply and demand. There's only so many companies and individuals that provide this sort of training. So you can imagine how much the cost of it would skyrocket. And then they want one size fits all, which is, you know, an in-person 2-hour session. I do HIPAA training for the federal government because we have medical information, because one of the things we do is sell insurance. And even though I'm not involved in it in any way, I've got to do this training. But the training's video. You know, it's 45 minutes of video every year, and you've got to answer 3 out of 4 questions that they give you correctly, and then you pass, right? Why not allow companies to do video training, which is still a cost and still, I would think, onerous, but less than this, you know, one size fits all. And I think sometimes people propose these bills so they can get people to vote against it, so they can say somebody voted against it and I voted for it.
You know what, and you can comment on this too, Chris, I mean, just your own personal opinion. Listening to what Joe said, having been involved in politics myself at all 3 levels, there was a lot of what he said was true when you were explaining why people introduce all this legislation, et cetera, et cetera. But I mean, having said that, do you think that it's possible to change the mindset of the legislature, or?
You have to change the membership of the legislature to change the mindset. And you know, we have exactly the kind of person we need is a small manufacturer, a businessman. I came into politics, my father was a small manufacturer, and that is what has given me the perspective I have on things. We need more people to come out of business. But we also need people that will stand up and say no to things. The bill you talked about not being able to ask anybody how much they made, the reason it passed was because it was called a pay equity bill. And it's very hard to vote against. Let me say how hard it is to vote against a pay equity bill. You know, out of the 36 members of the state Senate, there was 1 vote against it, and it was me. And because I reached a point where I don't want to vote for nonsense. But I understand my colleagues saying, especially if it's going to pass anyways, why do I want to be on the wrong side of something like that? But we need people that don't care about politics and are willing to just do what they think is right.
Chris, you hear people talk all the time. I can see myself being in your office, right, and talking to you about my retirement plans kind of a thing. But in the course of the conversation, we talk about other stuff. Do you ever hear from your constituency, the people that come to see you privately, when they start to editorialize? What are they saying about business in Connecticut?
It's decidedly negative, unfortunately. I think Joe would agree. Connecticut's a great state. It's been very kind to me and my family. When we moved to Connecticut, it established us solidly in the middle class. It's been very good to me. But Connecticut's losing the economic battle day in and day out on multiple fronts. And I tell you, Jim, it's sad that if I speak with somebody that's preparing to retire, you know, they might be in their 50s, but you know, it's that final stretch to retirement. I've stopped asking if they have a plan to move out of Connecticut, and I just assume and ask, so what's your plan for exiting the state after you retire? Because the vast majority of people I meet with as they prepare for retirement, they have an exit strategy where they are going to leave Connecticut. And far too many people actually exercise that plan, not all, but too many, it seems to me, to help make Connecticut successful. And it's a shame. I use one example, an architect, great member of the community. Joe probably knows him. He lives in Southington. And he sold his business on December 31st of 2015. By January 31st, he was a resident of Florida. And now some people will tell you that it's because of the weather. And to a certain extent, that's true. But it's much more of an economic decision than it is a weather decision.
Absolutely.
And it's sad because we're losing great taxpayers, part of the fabric of our community, and it's just not healthy for the state of Connecticut to lose too many good citizens.
And it's happening at a younger age.
It is.
You know, it used to be the people would be 65 and they'd be going. Now they're 57, they're 59, they're 62, and just losing that difference of several years has a significantly negative effect on state tax receipts.
That's a great point. That's great. I mean, the example I give is exactly what you said. He was 57, and it's very commonplace. So it's sad to see that so many people, when they come to meet and map out the wonderful goal of reaching retirement, that Connecticut is either not going to be in the picture at all, or will be much less than it used to be. And these are people that raised their children, built businesses, worked in the state, and their key criteria is often moving out of the state in part to get out of the tax burden.
And cost of living,
Yeah, cost of living. It's a shame.
So, are you planning on moving out of the state of Connecticut, Mark?
No, I don't follow that narrative.
Okay. So why do you like to stay in the state of Connecticut?
That's where my business is. A personal reason is my daughter's going to be taking over the business, and she's in
That's right, Mark.
she's in her late 20s, and my father couldn't wait to retire when he was 60, and he moved to Florida. My generation's going to work at least to 70, if not later. My kids' generation is going to work to 80, and I've told my daughter, get married, start a family, and then in your 40s, come and rock and roll at work. So I'm looking at staying here. Look, if you have money, you have something to lose. I plan to, when I die, I plan to have no money. When the taxing authorities come, they're going to find bleach bones. They're not going to find anything. So
It's an interesting retirement plan here, Chris.
you know, so I'm not concerned with that. Look, you know where to go for breakfast. You've grown up or in the state. You know where to go to the beach. You know where to go skiing. To move to Florida, South Carolina, first of all, I don't care to golf, and that's about the only thing they can do year-round there.
Mike,
this is a personal
Mike,
thing.
Listen, you move in circles. Mostly your circles at the business level would be small company people that you know, right? Especially manufacturing. On the comment that Chris is making and that we're all making right now, among the peers that you have when you're meeting and you're talking with them, are many of them saying what Peter and myself?
Yes.
They are.
Yes.
What are they saying?
Well, I think you got to go back to the fundamental assumption they're making. They're making an assumption that they're still trying to increase assets.
Right.
So they have something to protect. I'm in a situation where I'm very comfortable where I am, and I'm not looking to increase it, so I have very little to lose. So they're making a financial decision. I think I'm making a lifestyle decision.
Okay. But do you find many of them
Yes.
that are looking, they are?
Oh, absolutely.
You're a contrarian.
I happen to be in this case. However, that being said, if our business continues to grow and get new customers, there's a certain type of business that's going to require us to have either a whole lot of automation in Connecticut or have a plant somewhere else.
Right, exactly. Okay, so listen, let's move on to the next subject. And the next subject, we can start and finish in the next segment that I wanted to talk a little bit about or bring up anyway, was trade and tariffs. Now, I need to depend on all of you, and Chris, you can relate this to your customers as well, but I need for all of you, and I'll use you, Pete, to do it. Define for our audience, when they hear talk about trade and tariffs, what is being talked about? And another phrase that they hear a lot is free trade, and they hear fair trade. What's up with all that, Pete?
Well, first, we live in a global economy. So trade to other nations is essential. If you take a look at Connecticut, the average company that does international business tends to pay their employees more. They tend to be more insulated from the ups and downs of the economy. And they tend to have a lot of customers. And also, they tend to be tougher business people, because when you got to compete internationally, it's a little different than competing nationally. So that's important. Tariffs are something that are a problem. I understand why sometimes people want to introduce them, because they feel like we're getting the short end of the stick.
What is it? What is a tariff?
But a tariff is a tax by any other means. What it does is it says, if you're a foreign country and you want to sell steel to America, you've got to pay an additional cost on your entry fee. And that would supposedly raise the price of the foreign good and make the domestic good more competitive. However, there can be complications with that, and I'll give you an example. Let's say you have a Connecticut manufacturer who makes parts out of steel and sells them to other Connecticut or US customers. They may find that their cheaper foreign steel allows them to make their product at a more competitive price, so they can sell to those other US companies. And when the price of foreign steel goes up, it makes them less competitive. It hurts their business, maybe have to lay off employees or close their business. And, subsequently, a company from Canada or Mexico may be able to sell to their customers. So it's a very dangerous game. It's one thing to threaten them and to get people to change their behavior. But when you actually institute it, there can be all sorts of unintended consequences.
Well, it sounds like we've only got about 1 minute to go in this segment, but it sounds to me like, not it sounds to me, when I see it and observe it, it sounds to me like the president has decided, that at the policy level anyway, he's made his decision that he is going to be implementing. In fact, he's doing it right now.
Yes.
He's implementing not only tariffs against, for want of a better word, China and countries like that, but he's also talking about our allies as well. And in the next segment, we can talk about the consequences of him doing that. But I'll tell you, in light of another subject, we're going to talk about that popular nationalism. It sells well to the voting subject, to the voting country. And the equation he sets up, Mark, essentially is, you know what? They're taking advantage of us, and I am going to be using tariffs to equalize the playing field. That's a nice political message. Now, whether or not the law of unintended consequences takes over, which it probably does, I know that you do international work, Mark, so you can comment on that in the next session, because we're all out of the first section with only 3 seconds to go, right down to 3 seconds. We'll be back with our next segment in our finance panel.
To Maddie, congrats on paying off all those student loans.
Finally, right?
How'd you manage that anyway?
I started tracking my spending, changed a couple of habits.
Wow, I'm kind of living paycheck to paycheck right now. I don't even know how I'm doing it.
Well, have you tried saving a little?
I want to, but where's that money going to come from? Bill collectors, they're the worst. Am I right?
When it comes to financial stability, don't get left behind.
Not home.
Get tools and tips for saving at feedthepig.org.
Hello again, this is Jim Pellegrino, your host for the hour. Welcome back to our second segment of the show. Our financial panel, Joe Markley, State Senator, Chris Calandra, Certified Financial Planner, Mark Namath, President of Jonell Laboratories, and Peter Gioia, Vice President and Chief Economist of CBIA. So we were talking about trade and tariffs, so let's see if we can wrap this up in 5 minutes. The equation that I just put on the table was essentially, I think the president's done a really good job of saying that that Chinese government or any other, now he's going after the Europeans, some of our allies, and even Canada, I was listening to this morning, and they're saying they are doing a job on us and I'm not going to let it go on very much longer, so I'm going to slap some tariffs on it. That's my way of saying what he's doing. But there is one person on this panel who does business internationally, and that's Mr. Namath.
Yes.
So what do you think about all this,
Very
Mike?
concerning.
You're concerned?
Very concerning.
Okay.
The three main international markets for us are Canada, Europe, Asia. There's a perception that if you're a small company, there's more risk to do business with you. We fight that by doing things better than our bigger competitors. And I can tell you in Canada, we feel there's, as you use the term, economic nationalism. They prefer to deal with Canadian firms to a great extent. I think we've been making a lot of progress in Europe, and we have we travel there 2 or 3 times a year, and it takes a long time to get there. I'm afraid that the ability to do business in Europe is going to be very much negatively impacted by if this tariff and trade war starts. And obviously Asia, Japan particularly, because they're tied in with our economy. So it's one thing to bluff, as you said, it's another thing to follow through. And once you follow through, I think people get emotional, or countries get emotional, and if we're going to have economic nationalism, they're going to step up and match our economic nationalism. It's going to...
Mark, let me tell you where I find some solace in this, and I don't know whether or not this is an oversimplification or not, but as a layman to this area, trade and tariffs, okay? I don't know as much about it as you do and Peter does, but I know enough that what sounds to me reasonable sounds reasonable, right? And when the president says those kinds of things, it sounds good to me at the political level. Look, all things have got to be fair. But let's talk a bit about the business you're doing. Would you say that you're involved in fair trade or free trade?
I think my business is basically centered in the aerospace business,
Right.
and that's an international business. You have Pratt & Whitney does an enormous amount of business overseas.
Right.
We follow them, and so I think it's fair and free because there is not a problem with them selling engines on the Airbus at all.
Right.
So I don't buy this, at least from my perspective in my business, but I can understand the appeal to Trump's base, but my reality is that it's not he's solving a problem that doesn't exist.
Okay. So he has a solution looking for a problem. Okay. So Peter, let me hold on, just let me ask you this question, then you can build on your own response, right? The other part of me that overly simplifies this issue would be, wait, let me understand this now. Canada is really, I listened to their prime minister this morning and I'm saying to myself, this prime minister is going to pick a fight with the United States of America and actually expects to win. In other words, the equation would be, who needs who more? Is there any country that we need more than ourselves, Pete?
We need each other, and somebody doesn't pick a fight and win. Somebody picks a fight and both sides lose. You know, this is a lose-lose proposition if played out, because what you do is you create false senses of security and protection for industries that benefit from the tariff. Meanwhile, your more competitive industries that are surviving without the tariff are losing markets. So it's a lose-lose proposition.
That's interesting. So, Chris, let me ask you a question. You know, Joe comes to me and says, you know, a good certified financial planner? Of course.
Yeah,
I say,
hope
Chris
so.
Calandra. Of course. So Joe goes into your office. He says, hey, I'm going to do a little retirement plan A. I got a stock portfolio that involves some foreign countries. And what I heard on this panel that I was in today from my good friend Peter and my good friend Mark on the left side of my table here wasn't very encouraging for me. So anything that I've got invested in foreign stocks, let's do something about that. Chris, save me here.
So if I could respectfully disagree with each of them, I think Main Street Americans that I deal with, they agree with your premise, Jim, in that the idea that we're taking a stand and we're not going to be taken advantage of and we're going to get a better deal really resonates with Americans. Now, they might not know all of the intricacies of this. They may not know the dangers and keeping score of you might get a little bit here, but you might lose here. They probably don't. But I think this consumer confidence that we see, I mentioned earlier, that's at 18, 20-year highs, and the right track, wrong track survey shows that most Americans think the country is on the right track. Those numbers are very strong and they've been improving. I think speaks to the idea that they like the idea, maybe not the details, but they like the idea that America is not going to be taken advantage of.
Okay, so let me carry that one step farther. So let's simulate this situation, right? With you having been on this panel today,
Yes.
with these two smart guys to the left of me who do know all the nuances, and you're sitting there with our boy Joe Markley, right? And you're looking at him because you've got newly acquired knowledge now, Chris. Are you still going to be saying to them, well, maybe we need to be a little bit more conservative with our foreign portfolio?
No, I don't think so, because at the end of the day, like he said, it's a lose-lose proposition. And I think compared to times in the past when negotiations mostly happened outside of the public eye, everything is in the public eye, and all sides use social media and the media as a voice for the negotiation, so it becomes a little scarier. But I think at the end of the day, it's the type of thing where there's the threat of a trade war and nobody wins in a trade war. It usually doesn't happen, and it's not going to happen here. If it does, it's bad, but the likelihood that it happens is really, really small. And if America ends up better off because we have changes in trade policy, that's what Americans are seeking, and I think it's part of the reason for this confidence, which leads into the economic growth.
Okay, so here I am. I'm sitting at the state Senate in Connecticut. There's Senator Mark Lee sitting there, and I'm in economic development, and I'm testifying today. And I might also be coming from the state treasurer's office, and I'm testifying in front of you considering my pension funds, right? And I watched this show today, and I'm listening to Joy over here, and I'm listening to Namath over here, and I'm listening to Chris, and you're listening to me from the economic development part in the pension fund, and I'm giving you this business about we ought to be investing more of our pensions in the foreign market or the economic development department. I'm trying to recruit these foreign companies. Has any of this conversation affected you in terms of your priorities with them and what they do?
You know, it's a conversation that's been going on for a long time.
Really?
I was thinking, well, I think one of the fundamental conflicts in the American political history was over tariffs. And once upon a time, it was the basis virtually of the entire federal revenue. And it's funny, it's one of those issues that the parties have changed on over years. The Republicans once upon a time were the great party of protection and high tariffs, and they've tended to go in the free trade direction. And now the opposition to it tends to be from the two extremes. You have Ralph Nader and Pat Buchanan agreeing on high tariffs and everyone in between on the other side. I guess what I would say is, to my mind, it is, as much as I respect Peter, who I've known for a long time, I don't know that it's quite as clear in my mind as it is in his that the tariffs are necessarily a bad thing. I think it's something that's there's been an argument about, and there's likely to continue to be an argument about. And in the long run, I wouldn't, if I were sitting on that panel, I wouldn't let the tariffs determine which way I
Okay,
went.
all right, let's switch. The president is also ostensibly, these are my words, not his, going after NAFTA, and he already terminated the TPP, the Trans-Pacific Partnership. Done. It's over, done with, right? Now he's negotiating with Canada and Mexico, who are the two countries with us, involved with us, in NAFTA, and he's going after them as well, under the same banner of, we've been getting ostensibly economically screwed, we've lost a lot of jobs, and in the word of, who was that guy who ran for president, the independent? The little guy, Ross Perot. Remember he said, the great sucking sound. And Peter, you bought into what Ross Perot was saying, or you didn't? So how do you feel about our friends?
I think if you look back over the history of NAFTA, you realize that it's been a win-win for Canada and the U.S. It hasn't necessarily been a win-win for the U.S. with Mexico. And so, if I was advising the president, I would say, let's do a separate deal with Canada, and let's do a different separate deal with Mexico, or not. The big problem we had was we lost a lot of manufacturers who went to Mexico for cheap labor. Some of them have come back because they found that cheap labor doesn't necessarily fit their model, and sometimes cheap labor isn't so cheap. But Canada is a significant trading partner of the U.S. And vice versa, and it is a particularly significant trading partner for Connecticut because we've got proximity to them. So I am also concerned that we do not get a deal with Canada shortly. And let's put this in perspective. The tariffs, the free trade, the NAFTA. The U.S. economy, as I mentioned in the beginning, is going great. Even with these bumps, they're going to go great. But it could go greater if we chilled on the tariffs and we got an agreement with Canada.
So you're saying it's going to be a going forward good, better, and best situation.
Right.
Okay? Right. Let me ask you a political question, Senator Markley. My political question would be, it's now November of this year. We're having midterm elections, right? And your view is, in terms of the effect on the economy, on the one hand, the Democrats win back the House of Representatives. On the other hand, the Republicans maintain control of the House of Representatives. I'm not thinking that the Democrats are going to take over both the Senate and the House. They may have a chance in the House. I think they're overplaying their hand a bit, but so be it. Let's just postulate those two things. What do you think would happen if the Democrats took over the House of Representatives relative to the business and the economy?
Well, if I didn't believe it would be bad, I wouldn't be a Republican, right? I mean, I'm a Republican
Your
because
honesty becomes.
Well, it almost goes without saying. I think that the principles of our party are the ones that can take us to prosperity. And I think that what's happened in Connecticut under Democratic control is proof that their prescription doesn't work. And so I think it's healthy for the country if we keep the government in the hands of the Republican Party, and I think as long as the economy is strong, that's likely to happen, because that is going to be the people's sense of where the economy is going is what's likely to make them decide who to have at the tiller.
But let me ask you a follow-up question to that, Joe. Do you think, let's just accept what I'm saying and say that the Democrats perhaps win. That's a general concern that you've expressed. But if they were to take over, right, on day one after the takeover, what would they go after? Would they try to repeal the tax plan? They just did a big thing with Dodd-Frank, right? They did a lot of stuff with Dodd-Frank. What would the Democrats?
Bipartisan, though.
It was?
Yes.
Oh, well, that's good. All right. So, but the tax plan and the reduction of regulations, would they go back after that, do you think?
They wouldn't be in a position to undo anything with the Senate and the presidency still in Republican hands.
Well, the Senate because of the veto.
Yeah.
I wouldn't say the Senate's predictable for anything up there.
No, but it's still, it would be a tough road. I think you're less likely to move things in the right direction.
So what do you think they go after?
We talked before about regulation. I think the Democrats have always had a desire to make political points on things that are regulatory. Something like a raise in the minimum wage is an attempt to put Republicans on the wrong side of what could be a popular issue. So I imagine those sorts of initiatives would come out, but they're not going to happen. I think the real effect would be to prevent things like the tax reform that took place from more things like that from occurring.
Okay. Mark, what do you think would happen?
Assuming they don't go for impeachment, I quite frankly think they'd be able to work with Trump better on the economy, because the Republicans don't seem to want to work with him. And I'm hoping that we'd have an infrastructure bill.
So actually what you're doing is you're going back to what happened between our good friend Bill Clinton and Newt Gingrich. Yeah. They actually came together on a lot of stuff, but that was because Clinton was smart enough to make the adjustment that he had to make. Remember, Mark? Yeah. Those two guys came together. They eventually separated again, but they passed a lot of critical legislation, and we had a boom economy. Yeah. By the time I think Bill Clinton left office, it was a boom economy.
I don't think Newt Gingrich gets enough credit for that.
Yeah, well, yeah, bringing the legislature along. I agree with it.
I was going to maybe stray out of my lane a little bit. It seems like, given the discussion, it's important to recognize that Donald Trump, whether you're a fan of his or not, he's a change candidate. Anytime he has a chance to change something, he's going to opt to change it. When it's the regulations, trade policy, the TPP, and so if the Democrats were to take the House, the pace of change that he wants to make would invariably slow down, and that would gum up his ability to change things on multiple fronts. And despite the fact that in many instances he hasn't worked particularly well with the Republicans, he has managed to create a lot of change. And he would prefer to keep being that change candidate. And a Democratic takeover of the House would seriously slow that down.
Pete, what do you think?
Well, you know, Newt Gingrich and Bill Clinton may have been able to work well together, but I don't think that Nancy Pelosi or her successor is going to work very well with Trump. I think we're going to get a lot of gridlock.
Yeah, I don't think any of us are being negative when we prescriptively look at what would happen if the Democrats took over relative to President Trump, and the good point that Chris makes about change. The reality of it is that if they take over in 2018, all they're going to be focused on is 2020. And everything that they do, I'm guessing, and I don't mean to sound too cynical about this, is going to be channeled toward, we got to win that presidency back. And that means what you're describing. Mark? Further thoughts?
Yes. If all they have is that Trump is a negative and they don't have an economic plan or a plan, they're going to be in trouble.
You think?
I think people, it's going to be awful hard for people to vote against their pocketbooks when they see the change that they're experiencing, and the Democrats are only concerned with the Russian investigation, impeachment, Stormy Daniels, and they're not doing the governance like they should.
Mark, that was a very good little 2-minute that you had. We ought to think of running him, before he retires. Joe, what do you think?
As soon as he retires.
As soon as he retires. Mark, let me tell you something, my friend. Intellectually, I agree with you 100% of what you just said. But I guess where I am nowadays with the United States of America is at the emotional level. I think, and it really disturbs me a lot, it's for the first time in my life I'm scared for my country, that at the emotional level, Mark, this country is capable of almost anything right now. I just think it's become so polarized and so totally unpredictable. I hope you're right. I really hope you're right. Listen, let me switch to something else, and that is everything that's going on in the Middle East and everything that is going with Iraq, with Iran, with Syria, with Israel, that whole thing there, and also in North Korea. What's your opinion about the effect on our economy, if anything, given what's going on internationally, all the potential conflicts?
The critical thing is the Gulf in the Middle East. And the critical thing isn't Iran and us, or even Iran and Israel. It's Iran and Saudi Arabia. I mean, they have been fighting a proxy war for years, principally in Yemen, but also every chance they get an opportunity to. And you know, we have benefited and been blessed by extraordinarily low oil prices. And you know, oil prices, and I haven't seen it calculated for above 70, but it's $70 a barrel compared to 2014 at $104 a barrel, puts $1,000 worth of purchasing power in the hands of every U.S. family. I think oil has probably peaked, and we'll probably see it go down into the 60s by the end of the year, which will be happy days are here again. But a hot war between Iran and Saudi Arabia closes the Gulf, which doesn't only affect those, it affects Qatar, Kuwait, the United Arab Emirates, all that stuff. And that's a real problem. You know, that would trigger a recession. So, you know, we perhaps need to think about how do we get these two countries to cool it.
Hey, let me ask a question. In basis of what you just said in terms of that would trigger a recession, that runs counterintuitive to what I thought happens when a country gets on a war footing or a war economy. I thought when we're in a war economy that everybody wins.
Oil goes to $150 a barrel.
Okay.
We got a recession.
Okay, but I'm going to give the devil his due. He came to office saying, I'm going to make you people energy independent. Isn't it true or false, that the United States of America right now is in a much better position vis-a-vis energy independence than we had ever been before?
Absolutely.
Could we make it on our own?
But energy markets are global.
Oh,
okay? And a lot of our oil goes to the Far East. That being said, we produce an enormous amount of oil between Canada, Mexico, and us that basically takes care of our needs. Europe gets its oil from the Gulf.
Right. I thought it got most of its oil from Russia.
No, gets most of it from the Gulf. Japan still gets a lot of oil from the Gulf. Those countries go into recession, and it will trigger a recession here.
Hey, you know what? Listening to him talk, Chris, I'm thinking about you and your client, Joe Barkley. I'm thinking about the basketball games that are on TV. Barkley. And I'm not being facetious when I ask this question. When I think about all the conversations you could potentially have with a client of yours, stock portfolios and all this stuff, do you, and I'm not being facetious when I ask you this question, do you feel like you have to keep yourself fairly well informed on all of this kind of stuff in order to give them good advice, Chris?
Absolutely. It's a requirement. It's part of the job, and clients look for you for guidance, and some things are specifically about investments and portfolio construction and forecasting how much money you're going to need at retirement, but other parts of the job include having a good understanding of world events, politics, macroeconomics. What I would say is, not that I disagree with anything Peter has said, in speaking with clients and counseling with clients, it goes back to what I said earlier. I've been in the business 26 years. I've been working with individuals and families for a long time, and there's always been the risk that there's a shooting war in the Gulf and the Strait of Hormuz is closed and oil prices go up and we have another oil shock like the 70s. But it hasn't happened, and it's not likely to happen. So in planning for your financial future and working out a plan for your clients, those events are scary and they would be problematic, but the likelihood they happen is so unbelievably small that they're best just reserved for exactly what they are, very, very unlikely events. You can't plan around those.
Right, okay. We have only 5 minutes left.
Crazy.
Let me ask you, Joe, We have 4.5 minutes left now. Let me ask you this question. If you had to pick, and I know it's hard to do this, but if you had to pick one thing that as a state senator who's running for lieutenant governor, the one thing that worries you most about what could impact this Connecticut economy, what would it be?
Well, it's funny, when Peter was talking about the foreign situation, it reminded me of the beginning of our conversation in the last section, which is instability is always a bad thing. It's a bad thing for somebody who's trying to invest. It's a bad thing for somebody who's in a business. What we want is to know what's coming down the road as much as possible. And Peter talked before about unintended consequences. It's another reason why I'm a conservative, because I don't want to see government do things that might boomerang on us without our being able to anticipate it. And going back to what you said about the number of bills we pass, I feel like the less we do, the less we roil the waters, the better off we will be as a state right now. I think it would be a good time to kind of hunker down in the way that the New Englanders used to know how to do, and not take on great new projects, not try to take the state in unusual and innovative directions, but rather just try to get our house in order for whatever is coming down the road.
Okay.
Let the private sector carry the ball.
Let them alone.
Right.
Let the private sector carry the ball. No new regulations, no new taxes. You know, get your own house in order. Get the fiscal house in order. And instill confidence in Connecticut businesses and in high wealth individuals that they stay and grow here.
You know, it's interesting you should say that, Peter, and the reason I do is that every time I have a panel of small business people on, or entrepreneurs on, right, and I ask the question, if I were Governor Malloy or I were President Trump and you had one thing that you had to say to me, what would you say to me to help you out? Virtually all of them use the same expression without being, I'm not leading the witness, right? Tell them to get out of my way and leave me alone.
Correct.
I hear that
All the time.
10,000 times a year.
Mr. Namath?
Last time I was on the show, we talked about what Trump had to do to be successful, and he did the tax reform, he did the regulation. Still hanging out there is infrastructure. If we're going to do infrastructure regarding the state, I wish we'd have a conversation about prevailing wage and how it stifles competition, and we end up paying, as some estimates, as high as 20% more per mileage of construction.
You remember that, Senator Markley?
One party wants to change it and the other party
Right.
doesn't. I won't say which is which.
Okay, so I'm giving my good friend, Mr. Calandra, 30 seconds.
So I would say that what you might want to be concerned about is the fact that Connecticut's competing with 50 other states or 49 other states, and we've consistently over a large period of time lost to those states. To me, the biggest risk is in this new economic environment that other states play the game better and are performing at a higher level, and Connecticut continues to lose and maybe fall farther behind. That's especially true with our neighbor Massachusetts and our neighbor New York, who are really thriving economically and leaving us behind.
It's interesting, you know, we used to all call, sort of semi-affectionately, Peter, Massachusetts, Taxachusetts. We don't call them that anymore.
No, because we're it, and they've gotten their act together.
Right, and they deliver a lot more value. It's a high-cost state, it's a high-tax state, but their economy has been much more vibrant. They get a lot more venture capital money. They have a more dynamic private sector, it's sad to say, than Connecticut's had for a while. And I think it's a big risk if those states continue to operate at such a high level that Connecticut continues to lose and fall farther behind.
Okay,
that would be a shame.
That's going to have to be the last word. So I have found just like I found the sports panel, a group of people I found at the sports level, to have a sports panel, I found my business panel. So the only thing that I've got to request, the only thing I've got to request of this time, because I've got to end it now, is that in order to keep this panel together, you have to win your election. Joe Markley, Chris Calandra, Mark Namath, and Peter Gioia, it's been a pleasure talking with you guys, and we'll be back next month.